Good morning, everyone. We're back. It's been Buckner with Ag Resource Company in Chicago. It is Monday, the 8th of December. Dan Boss is at meetings first half of this week. But wanted to touch base and kind of revisit the scaffolding of the global grain market since we got a flood of updates last week from a lot of government agencies. So production now locked in a lot of places in both hemispheres for the 25-26 crop year. We also got market steady to higher this morning. We've sold another 2 cargoes of U.S. soybeans to China, which could have been deals executed anytime in the last 2 or 3 days. But there is the cadence of Chinese soybean purchases is getting towards that 12 million tons as long as they continue to buy a couple of cargoes probably every single day from now to the end of February. We also wanted to highlight that the 12 million tons that China has pledged to purchase, we think, is still compares to the same period a year ago of 20 million tons. So the big question to us is, have we lost 8 million tons of U.S. soybean export demand permanently, or does that come back in spring and summer? But to start things out, we do have seeming confirmation that the U.S. administration will release a tranche of aid to the U.S. farmer to cover issues plaguing markets because of U.S. and China's trade war. And so hopefully we will get concrete details in the next couple of days, but it is what we suspected, about $12 billion released. That mirrors more or less what we saw during the previous trade war. And so I suspect that, like last time, this will be geared toward things most impacted by Chinese trade, and that will include sorghum and soybean. So we want clients to be prepared for the release of this aid to do what we have to do to maximize revenue from this. I think this is welcome. How this impacts farmer selling, I think, will be the key issue going forward, or at least linger in the background. But we also wanted to just highlight that we are still very much, the mantra is to be prepared, risk management. So I think if we want to revisit just the scaffolding, the structure of global grain markets, we think that they are adequately to oversupplied. And it's going to be very difficult in this week's WASDE, tomorrow's December WASDE, or even in the next several WASDE publications to really tighten global and exporter balance sheets. And we think that's important. And we'll kind of touch on why that is. So last week, bears in Australia raised barley production to a record 15.8 million tons. Canadian wheat production finalized at a record 40 million tons. Canadian canola production raised 1.8 million tons to a record 21.8 million. And the Buenos Aires Exchange in Argentina still expects a wheat crop there of an all-time record 25.5 million tons. So if we put that into the exporter balance sheets as a whole, we think we're going to have in stocks and exportable positions this year of the major crops of 226 million tons. That is up 20 million tons from USDA's current forecast and up quite a bit from last year. So clearing those stocks, I think, is going to linger in the background. And so that's why we want to be prepared, making moves when you do see market volatility. Geopolitical headline risk is going to be outsized for a while yet. And so we want to use that to capitalize. I think this is why this oversupply lingering in the background is important. We do have ingredients for periodic rallies, short covering. We're also looking at wheat insurance enrollment data. It really starts to play a role in forward U.S. winter wheat acreage forecasts about the end of December, but we're looking at it already. And so far, winter wheat acres enrolled in insurance programs are down about 1.6 million acres from last year. So we think maybe the market's doing its job. We're correcting U.S. wheat planted area. And what does that mean for the balance sheet? But you can see here in this table that we're just carrying over 900 to 935 million bushels of wheat into the 26-27 crop year. So even if you were to cut new crop U.S. winter wheat acres by 2 million, assuming normal weather, northern hemisphere wide, you're still left within stocks of about 900 million bushel. And so I think that this similar phenomenon exists in soybeans and corn. And so this is why I think adequate to oversupply matters. Again, we've got to have USDA prevent tightening balance sheets to sustain bull trends. Is that the case if there's not a weather threat in the southern hemisphere first, South America, but then the northern hemisphere next year? We just think supply has kind of an outsized impact on long-term price discovery. So keep that in the background as we navigate markets. We're also in the month of December. This is a critical month for soybean yield determination in Brazil and corn yield determination in Argentina. And so we can kind of now peek into almost the last few days of December, and it looks pretty typical to us. Brazil is going to be well watered. It's rained regionally pretty heavy in the last 3 days, and it's raining currently in Argentina. So I think that water is probably not going to be an issue for South America, at least for the next 2 or 3 weeks. And why that matters is I think you're already locking in something like trend soybean yields in states like Mato Grosso do Sul, Goiás, and Mato Grosso. I also think one of the key issues the soybean market's got to contend with, technically, soybean harvesting begins in Mato Grosso probably in 3 weeks. It will begin in earnest in 40 days. And so cash market replenishment in South America is imminent. It happens faster than you think. And also, if we look at what's happening in Argentina today, Buenos Aires will need rain after the next 2 weeks. The forecast there is dry, but that's also the area where today soil moisture is most abundant because of, pretty incredible rainfall in the month of November and even early December. And the corn crop there, at least for now, is rated historically pretty high at 79% good to excellent. So it's going to take some time, I think, before we build some kind of threat into South American production. And so kind of lastly, we're looking at soybean sales pace. What does the USDA do in its balance sheet tomorrow? And I think based on what we know through November 6th, and then even adding to this number flash sales that we've gotten to China and elsewhere, pace analysis would kind of mandate the USDA trim its annual soybean export forecast by something like 50 or 100 million bushels. In the week ending November 6th, and we'll get caught up eventually, but the U.S. only sold 19 million bushels of soybeans in the week ending November 6th. That's down from 46 million the previous week. And this is what that looks like. So the red line is cumulative sales as a percent of the USDA's forecast. We really have to get that red line into the yellow shaded area to justify USDA's forecast. And this is a unique year. Politics are playing an outsized role, but normal pace analysis would put U.S. soybean exports this year at most about 1.45 billion bushels. That compares to the USDA's 1.635. So the challenge, we're seeing soybean meal, soybean charts look certainly less positive, maybe starting to break down. And we think that may be starting to align with fundamentals. Given just China's got to buy a lot of soybeans on a daily basis, and the Brazilian harvest starts again in 3 weeks, begins in earnest in 45 days. So I think that those are the challenges we've got. So it's kind of the gist that we see in the markets, medium and long term. Not much has really changed. There's a lot of supply, there's a lot of stuff in terms of grain, oilseeds, vegetable oils on earth today. Does that change in early 2026? I don't think it's going to be because of South American weather. Everything looks pretty good there. So just be prepared. Choppiness, we still like taking advantage of recoveries, rallies with forward sales, locking in those premiums. All the best in the market today. We'll be back tomorrow with everything you need to know, and have a great trading day.